All right, it is time for our weekly analysis. We are going to discuss our possible trades for this coming week or even the coming weeks. All right, so as always, we always start on the monthly time frame. On the monthly time frame, price set a low from last week, right? And then if you use that low and you look to your left, this means that this is a very strong low, all right? Now, let me show you. If you look to your left, see price rejected. All right, furthermore, we still have this one. So this was an initial low that was set, right? And then price went higher, then it fell, and it created a new higher low because we have this low over here, and then now we have a new higher low, all right? And then looking at how what price has been doing, it has been respecting this low, as you can see, respect, and now over here, price is respected, all right? So if price has respected over there, for now, that's for now, price has respected for now, because if you are to look at all of our previous movements, right, price was going low, right? And then now we're creating a low, right? But then if this price is respected now, considering that price is respected in our previous weeks, right? Could it mean that price just wants to create a new high, right? Maybe price wants to retest for it to go lower, all right? Because the reason why I'm saying this is because if you are to look at our previous rejections, right? If you are to look at our previous rejection right here and right here, these are very strong rejections. We can see with the long wick that we have, these are very strong rejections. They are now different from the rejection that we have where price is at right now over here. It's now different because price just created another bullish candle, but it's still at support. So could that mean that price just wants to retest and then go lower? All right. So that's our analysis on the weekly time frame. So see, if this is our analysis on the weekly time frame, then that means we have to be patient and wait for price to give us more information. Now let's highlight our weekly high. All right. So you can even just write this, our weekly high. Let's say our weekly high. That means our previous weekly high. And then strong support. We need to know that so that when we're on our lower time frames, we understand what we're talking about. All right. Now, looking at the monthly time frame, the monthly is about to close in 3 days. So, yeah, some people would even wait for those 3 days to see how the monthly candle would close. Right now, it's still very strong bullish. But if price is going to close as a very strong bullish candle, we're going to need this week to be bearish, which is a little bit confusing considering that our previous week closed bullish. All right, now let's move on to our daily. There isn't much else to highlight there, considering where price is at for our weekly candle. All right, on our daily candles, that's when things make even more sense. So our weekly high, I'm going to put it right here. All right, so if we are so our weekly high technically is right in this candle, right? That's where our weekly high. But if you look at this area right here, that means our line is cutting through candlesticks, and we don't do that. So our weekly high becomes invalidated because price is already at a support that has other factors in it. And if our line is cutting through candlesticks, that means we need to adjust it so for it to be properly valid. And right on top there, that's where our proper validation is. So I'm going to remove the weekly high, and then we're going to put it right there. And then our strong support, we're going to adjust it so that it's not cutting through candlesticks. Now, this is proper. Simple but straightforward. All right. So using the daily candlestick of where price is at, right? We have a high, we have a low. That means price is created a range. So now this is our consolidation range. In our consolidation range, right, we also have a high that was set by the daily candlesticks, right? There, right? Why are we putting a high right here? We actually should be putting it right here. The reason why I'm saying we should be putting it right there is because price was made a high right here, right? It dropped, right? It gave us a reversal pattern. It went higher, but instead of it went higher and it rejected our previous high and it created a new high right here. So if price wants to go higher, all it has to do is go above this high, not this high. Now, since we have a wick over here that's covering our previous high over here, right? That means if price comes all the way back up here, all it needs to do is just to push all the way up and your target will be right over here. So this is your breakout line and this is your target. All right, I hope that makes sense. All right, moving on. Moving on to the next field. So keep in mind, if price is to go higher, it needs to close above this, your first target and second target. If it continues to go higher, third target. All right. I'm saying third target because of this week right here. You might have a clean traffic candle, but you need to watch out for this week. There might be something in this candle that we're not seeing because we're on the daily time frame, but it might be on the lower time frames. So you can have a target over there, but take some profits around this week, just to be careful. Okay, that's the bullish view. On the bearish view, since price is created a range, this is a daily time frame range, right? That means price can be around this area for a longer time. All right, because this is a daily time frame range. So if price can be around this area for a long time and price did create a lower high around this area, you could put a zone right there. All right, so if price is going to go lower, you need a strong candle closing around this area. So now if we have these two, that means this is our inside range. All right, we have a big overall range that we're looking at over here, big overall range that we're looking at, and this becomes our inside range. This inside range tells us if we are going to buy or if we are going to sell. All right, so you have to keep that area in mind. So you can even write bearish view and bullish view for you to know when you're on the lower time frame. So let's just write that. Okay, this is a daily bearish view. So let's say D. All right, and this is a daily bullish view. Never underestimate how these tiny details can help you during the week. All right, now let's move on to the 4-hour time frame. The 4-hour time frame, what do we need to adjust? We just need to adjust over here, right? And then our bullish view is perfectly fine. All right, so on the 4-hour time frame, this is what we have. Now remember, this might be cutting through our line, but this is a week on a higher time frame and this is a higher time frame zone. Remember that. All right, so we are giving it the exception of it cutting through candlesticks at the moment because this is a higher time frame zone. All right. So now we have that out of mind. Now, our first thing that we need to do is we need to highlight this area right here. Now, remember, we once talked about how you need 2 supports or 2 resistances for a trend to change. So if this price is going to fall all the way down to give us that bullish trend, then price has to break first support and second support. And then price can fall all the way with being your first target and then a weak fill target. All right. So price can actually fall all the way, but remember, this is also another trade on its own. So price, this can be a trade with your target being 1 here and 1 there, but the third one, this area right here, this is a weak fill. All right. And if you want to understand that, just watch our weak fill video and you'll understand how to capture that trade when the time comes. But for now, we are here and this is what price is giving us. All right. So you can actually say second support. All right. So you just know that this is your second support. If price comes all the way there, that's your second support. Now let's go on the 1 hour time frame. On the 1 hour time frame, this is where things get very interesting. Right? Do this. On the 1 hour time frame, right? Remember, our 4-hour candlesticks are bullish. These 4-hour candlesticks are bullish. We have a bullish candlestick, bullish candlestick, bullish candlestick. All right. Price is pushing higher. That's for today. Remember, we are daily traders. We have a higher time frame views and we have our lower time frame views. All right. So if price is pushing higher on the 4-hour time frame, what do we have on the 1 hour time frame? On the 1 hour time frame, right? Price has given us a low and high. So that means price is ranging, right? We have a range that's happening right here, right? So someone can take advantage of this range and someone can say, okay, I'll wait and see what price does, what price will do. The only thing that you need to be careful about is for a bearish view, right? Price created a low. Price created a low right here, right? If you wanted to go lower, this candlestick should have closed somewhere around this area, but this candlestick rejected. So price is trying to push higher. Okay. That's what our previous 1 hour candlestick is telling us. Price might have closed bearish, but price rejected the low. So if price rejected the low, that's just giving power the volume for it to go higher. All right. So you can take advantage of this because on the 4-hour time frame, we now have a weak fill trade. All right. Because if we look at the 4-hour time frame right here, we have a wick that can be filled. All right, price did clear up the wick from a previous 4-hour candle. We also have a wick that can be filled on this previous 4-hour wick. So you can take advantage of that. This is a wick fill trade. Enter now and your target being right there. That's how you trade your wick fill. All right, your target will be right there. All right, that's how you do a wick fill trade. But once that weak fill trade is there, you have to wait to see how that 4-hour candle is going to close. All right. Because this is a lower time frame trade. Because we all know that once after price has closed above our bullish view area, our bullish view area right here, right? Then you can trade all the way up with your target being first target and second target. first target and second target. All right. So just watch out, just be careful. There isn't much to it, there isn't much complication. This we've already highlighted our targets. We talked about targets. We have already talked about where the bullish view and the bearish view start. So just use that to your advantage and you will prosper. All right. That's it for this week's analysis. Just take it very simple. The simpler it is, the better you understand and you actually use that information to your advantage. Don't complicate it that much. Just use the information that you know and use it to your advantage. All right. Good luck, and we will all discuss when we have the other views or when we have more information.